1310 WIBA and Ask the Experts, brought to you this morning by Wisconsin Capital Management. The website, wizcap.com. That's WISCAP.com. Wizcap.com. Great place to learn more about Wisconsin Capital Management. Get to know the team there. You can also, if you're looking to set up that appointment, they'll get to know you conversation. If you head on over to wizcap.com, you can do it right from the website. Very, very convenient. And joining us this morning from Wisconsin Capital Management, Nathan and Tom Plum. Tom, how you doing this morning?
We're doing very good, Sean. Thank you. It's got a touch of autumn in Wisconsin.
Yeah, what a weird week it has been. And Nathan, are you getting a chance to enjoy some of this cooler weather?
Oh yeah, it's football season, so yeah, I'm fully on board. I love it.
Yeah, and that's you hit it on the head there too. It's been a great week for football. Feel it in the air as well, and we've got a great conversation this week. We're going to kind of refine some we had talked about the other week about a little bit about businesses and kind of working the roles in different areas, and kind of the analogy of almost like an airline pilot. We're going to get into that with Nate in just a moment. But first, Tom, real quick before we get started on this week's topic and conversation, let's talk a little bit about Wisconsin Capital Management, a little bit about the background there. Of course, you started Wisconsin Capital Management a few years ago. There's certain nuanced things, different, when it comes to like client profiles and other things. You guys get into a couple of different areas, don't you, Tom?
Well, we do, Sean. And our first few shows that we did, we talked about some of the basic premises that we use in establishing how to set up client portfolios, how to try to meet their investment goals, how to use compounding, and how to use risk control to actually make a difference between when you talk about actual volatility versus risk and how you can differentiate those.
Those are really, really good shows, and I hope if folks get a chance, listen back at Wisconsin Capital Management's website. It's wizcap.com. That's WISCAP.com. Listen to the podcast there. You can also listen to it on the radio station's website as well as on the iHeartRadio app. I'm pretty sure, too, if you ask your smart speaker to play Ask the Experts with Wisconsin Capital Management, I do believe I checked the other week, it was playing and working that way as well. So it's another great way to listen to the show. And Nate, we started talking the other week just a little bit about some comparables when it comes to similarities between maybe your industry and others, and kind of helping people break down what exactly it is and how you help people. Let's talk a little bit about that airline pilot analogy and kind of dig a little bit deeper into that one.
Yeah, thank you, Sean. Yeah, I got some good feedback on our airline analogy that we made on the air together. So if you recall, we talked about people that felt like they always could only be like first class in the plane, and that's how other financial advisors taught you. So we talked about high investment minimums and things like that. So just to tighten up the analogy, so we kind of look ourselves as like airplane pilots, and we're on the plane for your essentially your financial needs and financial future. So we have constructed our business so that we have kind of the do-yourselfist or DIY people in the back. People can choose different stocks for us from something called EcoTrade. And then we have our proprietary mutual funds, which is essentially our Economy Plus option. And then we also have like the first class white glove service, as everyone else has as well. But the main thing is that we're still the pilots, and we're all going the same place. So we understand what your financial goals are, and we can help you plan that follows the magic of like the power of compounding, as we talked before. And we can minimize the probability of volatility in developing risk and having the cash flow to support your lifestyle. So going back to that analogy about airplanes, like we're hoping to, take out the turbulence for you. So, and again, if you have this financial discipline to have saved $1,000 in your life, you're ready to get on that plane. So, you have to get on to help your future take off and your investments take off. So I just wanted the key thing is just, get on that plane, get to the airport, get on that plane. And it's so important. You mentioned Nate, even making that small initial investment just to start is, I think for a lot of folks, sometimes maybe they feel as though they've missed opportunity. They see all these great things going on in the market and they go, yeah, well, that stuff has passed me by. The reality is the best day to start. I think the line is always best way to start investing
investing is yesterday. The second best day is today. It's always a great time to start that investment, isn't it?
Yeah, it's very true. So people think like, oh, that doesn't apply to me. They go, this person had X, Y, and Z happen to them, so they're luckier than I'm. Like, no, you all start in the same place. You all start with the first step. So you just got to go. It's
a great day to make that first step as well, as we talked this morning with Nate and Tom Plum, of course, with Wisconsin Capital Management. The website, wiscap.com. That's WISCAP.com. Great website and resource to learn more about Wisconsin Capital Management, and, of course, set an appointment as well right online at wiscap.com. I'm going to talk to Tom in a moment just about transitioning as well. You spend all your working years saving, and then you get into retirement, and you got to start thinking, oh, I've got to start spending this stuff. That is quite the shift as well. We're going to talk with Tom about that in just a moment. But real quick too, Nathan, when you were talking about your airline analogy, it was funny because my wife came to mind. My wife is like, just, she's, and I love her for this, is she's a chronic worrier. She's one of these people that no matter what, she's always thinking, okay, something bad's going to happen. And you were talking a little bit about white glove service and like first class things. I'm going to guess she's probably one of those types that you would kind of refer to that, for her it's not that she doesn't trust. She just wants to be assured that everything's going well. And we talk about some of the things you're able to offer at Wisconsin Capital Management for folks that really want to be kind of hands-on and get that back and forth information. You're very, very open to helping and guide people. And maybe those folks that are worriers that just need a little reassurance, you guys are there for them, aren't you?
Yeah, and we preach balance, and so hopefully we're designing these portfolios to hopefully mitigate the volatility. So the worst thing you could do in our field is scare someone out of the market. So if someone is so worried, they're just like, I got to go to cash, I go to zero. That is always the worst possible thing you could do. So people in our field, if you choose us or anyone else, is always going to try to get you through those hard points. And that's actually, probably money well spent on a financial advisor.
That is for sure. Talking this morning with Nate and Tom Plum, of course, of Wisconsin Capital Management. Mention the website, wiscap.com. That's WISCAP.com. Hope you get a chance today to stop on by the website again. That's wiscap.com. Get to know Tom. You can get to know Nathan and the whole team at Wisconsin Capital Management. Learn a little bit more about them. And, of course, you can also set an appointment right online at wiscap.com. So, Tom, bringing you into this conversation, it's weird to think about, but we spend so many years squirreling and building this nest egg, putting money away. We often think, I think, especially when we're younger, like we're going to hit that goal, we're going to hit that number, we're going to hit that date to retire, and it's going to be just so easy to suddenly start, opening up this vault and just spending this money. For a lot of folks, because of all of those years of discipline and work and savings, it's not as easy as it appears to kind of throw that switch, is it?
No, Sean, a lot of people, as they approach the time of, let's say, retirement, because that's one of the big milestones that people hit. But as you approach that number, you start to get anxious and you start to ask yourself, how much do I need in savings for a comfortable retirement? How can I do it, as Nate said, with the least amount of anxiety, but actually start to move the concept from being, I need to save, to I've saved enough, now I can afford to actually comfortably retire.
Let's talk about some of the terms and some of those areas as we talk, Tom, about comfortable retirement. What are some of the things we need to know about there?
Well, Sean, I think the three things that we like to talk about, one is the concept of a sustainable withdrawal. And by that, we mean that if you have a certain dollar amount of assets and you would like to start to think about what could I take annually from my assets, from my savings, that will allow me a comfortable retirement today and to keep up with inflation so that I will have a comfortable retirement in the future and not run out of money. We call that sustainable withdrawal. So we set up and look at, we have to have an assumption of what your earnings rates will be, what the inflation rate will be, and what time frame we're talking about. But that's an important concept of how much can I start to take out today and be able to maintain that withdrawal rate for the rest of my life. The second one is basically looking at what are your true financial resources available to support your cash needs. You may be asset rich. You might have a very valuable house. You might have an art collection. You might have cars, but typically they don't provide cash flow. So you need to be able to define what assets are actually going to be there to support my retirement. And finally, the time frame. Are you looking at your life expectancy? Now you can put variables around that because most of us don't have the date when our plan will end. But are you looking at your life expectancy, or are you looking at what we call legacy for your children, your grandchildren, the foundation, the charities, anything else that you might want to support beyond your own life expectancy? So time frame is very important when we look at that third variable.
And you also think about that time frame as well, and that variable is as we're going to talk a little bit later on, are some of the risks to your portfolio and other things. But time is definitely the biggest asset you have. And as we started this conversation this week off talking about the importance of taking that first step, getting started, today's the day to head on over to Wisconsin Capital Management's website. That's wizcap.com. That's WISCAP.com. You can set an appointment right online. A great day to start building that portfolio, building that nest egg. Again, it starts with a little step. If you've been looking, been interested, they'd love to get to know you at Wisconsin Capital Management. Again, the website, wizcap.com. That's WISCAP.com. We're going to continue our conversation with Tom and Nathan. We'll talk about that inflation word. We'll also talk about something you probably heard about and may not know the history of, which is the sustainable withdrawal rate that some folks think as far as a percentage. We've heard some numbers. What do they mean? What is the actual withdrawal rate? We'll find out from Nate and Tom. We will do that next as Ask the Experts with Wisconsin Capital Management continues right here on 1310 WIBA. WIBA and Ask the Experts, hanging out this morning with Tom and Nathan Plum with Wisconsin Capital Management. You can learn more about the guys. You can learn more about Wisconsin Capital Management, the team there. They can also, how they can help you, and of course, set an appointment right online, wizcap.com. That's WISCAP.com. When you get into the office this morning, check that website out. Again, it's wizcap.com. I'm talking this week with Tom and Nate about some really important things when it comes to comfortable retirement and saving for a comfortable retirement. And of course, that in that last segment, Tom, you had mentioned sustainable withdrawal. And I'm going to put this on you, Nathan. I think a lot of folks hear about this. What is it? The 4% rule, I think it was. Explain what that is and a little bit about the backstory there, Nate.
Yeah, so a lot of financial planners use this kind of like this withdrawal rate they have in these financial plans that they have they build. And the key assumption is that you take out 4% of your assets every year consistently, right? So we find in real life that's a little bit different. So again, just to kind of go back to that 4% rule. So if you have $1 million in your retirement and you're taking out 4%, that's taking out $40,000 a year. So even though you're a millionaire, and that sounds absolutely amazing and just like an incredible number, in the retirement, like, you know, 40,000 a year, you're actually not that rich. Yeah. So when you're talking about billionaires, you know, there's a difference between you're talking about, you know, a person with $1 million, people with $5 million, person with $50 million, and then you get up to the, you know, the people that hear about the news with hundreds of millions of dollars. But so $1 million is a lot of money, but it's very achievable for most people. So just think about the withdrawal rate and the 4%. Just keep that. If you had $1 million, the financial planner is usually modeling that you're taking $40,000 a year.
With that breakdown too, Nathan, as if it was a Bill Bengen, I think was one of the notes pointed out. It was kind of the guy that authored that, and as you were alluding to there, that number I think for a lot of folks and folks that meet with you are maybe surprised to learn that number might be a little bit lower than it actually in practice might actually be a bit more. Am I off on that, Nathan?
Yeah. So again, when you're talking about $1 million, you're thinking about, you know, Lamborghinis and, you know, really, you know, affluent lifestyle things. Yeah. But for people, the middle class, and this is what it really means. And this is what, hopefully, if you talk to an expert, they're going to keep you within this range. The thing is that you want to be balanced. I guess that's our mantra. So you always have to have some assets that are going to grow, because even if you're 60 years old, I mean, from a retirement standpoint, you might still be young. We're hoping that you're going to live till 90 years old. So you got to invest, in a way that was conducive to actually making that number. So, we find that being balanced in stocks and bonds. So again, the stocks are the growth engine in the portfolio. The bonds are kind of like almost like a shock absorber. They're trying to keep the volatility, the turbulence down of the portfolio. We find that is pretty much an ideal mix. And that's what you see a lot of these endowments, foundations, pension plans. They usually have a similar asset allocation to the 60-40.
Talking this morning with Nathan and Tom Plum. Of course, they are with Wisconsin Capital Management. The website, wizcap.com. That's WISCAP.com. You can learn more on the website about Nathan, Tom, and the whole team at Wisconsin Capital Management. You can learn more about them, a little bit about their history. Also very important. You've been looking to set an appointment, get to know Nate and Tom. All you got to do is head over to that website, wizcap.com. That's WISCAP.com. You can set an appointment right online. The inflation word, I almost kind of get shivers when we mentioned that, but that is, and Tom, correct me if I'm wrong, quite possibly the biggest risk to all of this, to your savings, is that erosion of spending power because of inflation.
Yeah, as we've talked about in the past, time is a great friend when you're looking at your compounding for your rate of return, building up your assets and your financial security. But it also has another side to it, and that is inflation over time can be the biggest deterrent to actually being comfortable in your later years. So, when we look back at the last 100 years, and when Bill Bengen, who started this whole idea of 4% 20 years ago, he's revised his numbers, because the actuality is that there's only been one time when you had a combination of the stock market going down and inflation going up, so that you ended up not being able to withdraw initially 4.7%, almost 5% from your retirement assets. Now, remember, these aren't your only source of retirement income. You'll also have Social Security. Some of us actually might have a pension or something like that. But when you look at your actual financial assets and you think about what that could happen to them to prevent you from reaching your goals, or to, in later life, being able to sustain your buying power. Basically, inflation is the big enemy. In 1968, we started out, at that time, we had then two significant stock market corrections in the next 10 years at the same time that inflation started to accelerate from 6% to 9% a year. That's the worst of all worlds. If you don't have a 1968, now that's 1 in 100, so it's still possible. On average, the sustainable withdrawal rate has actually been closer to 7%. So it depends on how conservative you want to be and how you structure your investments, and whether or not you structure them in a way that you can be a long-term investor with a portion of those assets.
Talking this morning with Tom and Nathan Plum with Wisconsin Capital Management, online, wiscap.com. That's WISCAP.com. Don't forget, if you missed any part of today's program, you can listen back to this and previous shows all at the website, wiscap.com. You can also set an appointment right online. And as we talk about some of the risks out there to your portfolio, obviously, as Tom, as you mentioned, inflation is big, but Nate, also volatile investments and holding on to things that may not be worth holding on to. Let's talk a little bit about that, Nathan.
Yeah, so often in down markets, when people get scared, they want to kind of sell the assets that are the most down during a financial correction. So again, if you're modeling this out as kind of a financial planning, you're planning that out of a 10-year rolling period, you're betting the market will go up 7 or 7.5 of the 10 years, right? So there's going to be some corrections. There's going to be some down periods. So what do you do in those down periods? A lot of people panic and they want to sell the kind of like the high growth asset. And usually it means stocks. And again, just stocks are, you're buying ownership of companies, right? And so people panic and kind of sell those because they see they're down, right? And that's actually kind of like the thing you really want to avoid. So I know it's an emotional decision. No one likes to see, things going down. People think, oh my gosh, I can't lose any more than I've lost now. But, you have to really, try to understand these type of markets. So that's why we preach balance, and that's why we kind of preach you should have your money in essentially different buckets, right? So you should have some savings. Essentially, if you have something in checking or savings or CDs, I mean, you're not really saving money. Usually those interest rates you're getting on are just what is inflation or what currently is inflation, right? And then if you have some money that you need in the next 3 to 7 years, right, that's intermediate. So that's a really good part to be balanced, to be in stocks, again, ownership of companies and bonds, liability of companies. And then, what's the far off future, right? So that you could be a little bit more stock heavy. So it's usually not the wisest thing to adjust during these kind of down periods in the market. So you want to stay consistently in here. And that way, if you're balanced and you're not going to scare yourself, you're going to stay into the market. So I guess that's, what we kind of preach here is we preach balance and, don't put all your eggs in one basket, and just really, make sure that you kind of anticipate like when things go wrong. So otherwise you just kind of don't feel panicked.
Building really important and well-balanced portfolios this morning as we talk with Nate and Tom Plum. Of course, they are with Wisconsin Capital Management. And Nate, before we wrap this week, there's ever so often things you'll see coming up on the calendar, really important to highlight. And you mentioned coming up not too long from now, folks looking to purchase a car may want to pay close attention, shouldn't they?
Yeah, so if anyone that's been thinking about buying an electric vehicle, the EV tax credit of $7,500 goes away as of later this month, which is September 30th of 2025. So if you've been on the fence doing that, you should go out there this month and make it happen.
Really important. Great guidance there, as always. Talking this morning with Tom and Nathan Plum, our, of course, friends from Wisconsin Capital Management. Online, wiscap.com. That's WISCAP.com. Again, the website, wiscap.com. You can learn more about Wisconsin Capital Management. You can also set up an appointment right online, wiscap.com. Again, that's WISCAP.com. Tom, Nate, it's great chatting with both of you guys. Have a great day. Tom, you take care.
Thanks, Sean. You have a good day, too.
Nate, you have a great one also.
All right. Thanks, Sean. Appreciate it.
News comes your way next right here on 1310 W.